What's up, everybody? This is Jimmy with Trading Decoded. It is August 4th, 2025, and boy, was it a hell of a day, especially for the call put scenario. My futures traders, my options traders, my stock traders, all of us, we got to crush it this morning, and we got to be done pretty early. Now, there are some people that continue to trade throughout the day, and that's completely fine. That's just not where you're going to find me. With that said, I'm deciding to make a video today, fresh on the heels of my last night's video that I dropped, which was basically an updated version of my day trading strategy. Just wanted to show you guys a couple of the things that we talked about in this video in real time or in today's chart while that video is still relatively fresh. So without further ado, buy my book. There's good stuff in there, and let's go ahead and open up the charts. Oh, well, this is not the right screen, so please hold. Oh, there it is. Now, two things. Number one, if you can hear my 3D printer in the background, I apologize for that. Number two, I'm going to be quick about this, okay? Why? Because I don't want to waste your time, and your attention span is that for the most part. With that said, call put scenario. Today, it's worth mentioning, everything in the top 10 in pre-market was green, bright green. It's still pretty much green except for Berkshire and Amazon. So we weren't looking necessarily to be aggressive on puts in any way. Leading into the open, well, what were we doing? We were trending up. Okay, so we're going to be prepared for calls. Now what we need to know is what is going to qualify as a reason to get into those calls. Well, as I explained to you between the call put scenario setups from last night's video, if you haven't watched that, go watch it. I'll put a link. Where is it? It's over here. Over here. I'll put a link to it right here, but it's the video I dropped last night. All we're looking for is recent resistance, and if we get through that resistance, is there room to go to the next resistance? That's it. Hoping for the momentum of the morning or the move bringing us into the open continues. Hope that ADD gives us some confluence between Qs and ADD. And the call line was 559.02. If we can get through that, we'd be aiming for 559.55. Again, started out as a 53% or 53 cent move. That's all we were aiming for. Well, if you can get into these trades, it doesn't matter how good of a trade they become after you're in, but if you never get in the first place, well, then you'll never be able to take advantage of what may come as a result of being in that trade, which was a lot more movement to the upside in this particular case. Very unexpected, but if you were in it, we had people crush it today. Huge percentage gains on their accounts. Very, very green day in the community. But anyway, our put line was below 558.55. So if we got through 558.55, we were looking for a move down to 558.30. Not as big of a move, but also not what we were really hoping to play because we were putting in higher lows leading into the open. Now, unfortunately, for us options traders, for my futures guys, they got to take advantage of the opening candle because most of them got in a minute before the market opened, which is one of the benefits to trading futures, which I don't. Also, we opened above the call line. Now, when we open above the call line, I like to wait for a pullback. If it doesn't pull back, I don't get to take the opportunity that is that trade. On top of that, when you're trading options, it does take, at least think or swim, a couple of seconds to populate the option chain. So this happened pretty quickly at the open, so I didn't get to take advantage of that. The only reason that white arrow is there is because I want to show people how often or where the entry point is or how often the call put scenario works. If you go back and watch any of my videos, we cover this all the time, so I'm not going to harp on it. That said, as we pulled back, ADD was still printing green. Everything in the top 10 was green. SPY was still moving up. What are we waiting for? Let's jump into call. So I get in on the pullback here, not all the way to the pink line, but remember, old resistance, which is what was going to be the reason we were getting into calls in the first place, oftentimes becomes, and what we wanted to do is hold as support. Well, if we trust that theology, I don't want to say theology, that's religion. If we trust that specific information and you do agree that the market was pretty happy today, It's worth the risk. For me, it is anyway. Bought this pullback. As we started to move up on Q, SPY was moving up very, very comfortably. And when we got to this next resistance here and ADD started to print some red, I tightened up my stop a little too tight, got stopped out of the trade. Now for me, this was a, let me get this out of the way. Hold on a second. I think at 32, this was a 36.52% win for me. Shortly after getting out of that trade, obviously, I regretted it. Obviously. It turned into a well over 100% return if you would have just hung in there, which fortunately some of our members did. I was not one of the members that did. I got stopped out here because we were at resistance on one chart and ADD was showing some signs of weakness. It turned out to be just a small pullback, just a little blip on the radar, if you want to call it that. And as a result, I robbed myself of a bunch of extra money. Now, as we were talking about in yesterday's video as well, when we buy pullbacks during a trend, that is the opportune time to do it. Now, why isn't there an arrow down here? Well, two things. Number one, we hadn't pulled back to any support level, okay? Now, I didn't move these arrows up to the SPY chart, but you could see where it would have been here on SPY, okay? We didn't pull back to anything that had been proven to be support yet, okay? Now, it turned into a support, but that's only because it ended up becoming a higher low. Now, I was asked at this time, Jimmy, would you consider this a higher low? This is obviously in real time. And I said, well, it might be, but because ADD is printing red, I can't confidently jump into calls here. And therefore, I would have missed out on this trade, or I would have gotten into it a little later. When you are coming off higher lows, as I had mentioned yesterday, we're expecting resistance to fail, not hold. So if we get through that resistance, then we're hoping that it continues to go up to the next resistance, which it did exactly that. So I wouldn't have had the comfort of buying this pullback because it wasn't a support, turned into a higher low. Higher lows are good for calls, more likely to break resistance. Once we close above that resistance, we're aiming for the next resistance. All of that happened. Same thing here, okay? We put in a higher low. We got through resistance, pulled back, turned that resistance into support. You bought on support. ADD was printing green. We're looking for the next resistance up, all of which happened. And then we found the resistance, at least at this time, that price was going to stop moving up on. You don't know when it's going to happen. You don't know which resistance it's going to happen. But if you know where these levels are, then you could be prepared as you near them. You may have been so unbelievably green if you got in all the way down there that you don't care about a pullback or holding through this. But some people who get in later might get up here and say, man, that's been a long run. Eventually it's got to take a breather, or you just don't feel comfortable playing calls after a big run like this. I'm guilty of that. But if you know where it might stop moving up or struggling to move up, then you can be better prepared. Be prepared. Have your finger on the trigger so that if it does pull back or it does reverse on you, you get out of the trade. In this case, would have been a close back below the trend line if you weren't satisfied with getting up here to this resistance area. Now, fast forward a little bit here. I drew this red box here because I wanted people to realize that once we started to come, we didn't find any more trades after this because, like I said, I get off the mic at 12 o'clock. We did have some people recognize this is a higher low, and ADD started to print green, which was right over here. And we got through resistance here. So we did have an entry opportunity here at 1150. And as we were moving up, I reminded everybody, guys, red box, last time we were up here, the Q struggled. We had a 0% success rate of getting through this resistance earlier in the day. It's good information to have if you're in calls, okay? Especially if you're trying to squeeze the most out of that trade that you might get. Now, if you want to stay in the trade, simply move your stops into profit and hold on. Theta starts to get a lot more aggressive this late in the day, so holding too long through a sideways trade becomes detrimental to your profits and it starts eating away at them. Okay, you got to keep that in mind when you're trading same-day expirations. If you're trading futures, you don't have to worry about it that much, but I don't trade futures. With that said, 12 o'clock, I was gone. At this point, the market is doing a lot of sideways moving, with brief pops up, down, these pullbacks and things like this late in the day, catastrophic, expensive when you're trading options. But that's it, guys. That's all I got for you. I just wanted to show you a couple of these setups fresh on the heels of that video that I posted yesterday, which you should definitely go check out. It's a little bit longer, but that's because there's a little bit more information in there. I'm trying to cover everything that goes into my normal trading day. Okay. I'm trying to help you guys get better so you can spot your own trades and feel more comfortable in what you're doing. But if you got any useful information in this video, please like, share, and subscribe. If you'd like to join my Discord community, well, I'd love to have you. There are links down below, and just stop on in. First week is completely free. You don't have to leave if you choose not to become a paying member. You just won't have access to the trade rooms and things like that. But you can still stay in the Discord. And if you like what you get for that free week, consider becoming a paying member. I'd appreciate it. Also, check out my book. Very detailed information about all the things we talk about in these videos and the things we go over day in and day out in the trade room. And that's pretty much it. So I hope you all had a fantastic day. Till tomorrow. I love you guys. See you.